What's going on, everyone? Welcome back to another YouTube video. In this video, I'm going to go over a simple strategy of support and resistance that you can implement in the market and make consistent profits. And also, I'm going to go over the last trade that I took using the same strategy that I made $700 profit on it, just using a simple support and resistance strategy. All right, so now let's go over the chart and see how the strategy works. So first of all, these are all the steps that we need to follow in order to take the most advantage of the strategy. The first step is to go on the 4-hour or 1-hour time frame. So for this particular example, I'm just going to use the Euro USD, and then I'll go over a few charts later on after we cover all these steps. So the first step is go on the 4-hour, 1-hour time frame. So for example, here on the Euro USD, we go on the 4-hour. Now we unzoom our chart. As we see here, Euro USD has had a big downtrend over the last few days or a few weeks. Now we've broken below most of these swing lows. The major swing low that I have on watch is down here, right? So this swing low here at the bottom of here, this is where after price broke out of this range, this support and this area was the only area that was never tested after this move up towards the upside, right? So we had this entire move up all the way to new highs on a 4-hour time frame, and this was the support that was never tested. So when we come down, as we are seeing right now, when we have a downtrend, this is the major area that we look for a test or a retest, right? Now there is one little trick in the strategy that really, surprisingly, it's very simple and it really helps you. So if you go on if you use TradingView, if you go up here and if you click on line, then you see the line chart. The line chart helps you get rid of all the wicks. So all you see is just clear action of the price. Now the reason I did this is to comfortably draw my support and resistance. So the second step is, after we go on the 4-hour or 1-hour time frame, you can choose which one you want to go down to. If you go on the 4-hour time frame, then you want to find your entry on the 15-minute time frame. On step 4, go down to 15-minute. If you go with the 1-hour time frame, you want to find your entry on the 5-minute. My favorite zones are usually found in the 4-hour time frame, and then I go down to 15-minute to find my entry. But this is just my personality, because I usually want to take my time, find the best spot to enter in my trade, and when I have that entry, I usually tend to be very patient for the move to happen. I don't want to get in very quick moves. I'm not a scalper. I rather to take advantage of the bigger moves on the bigger time frames, right? Now I have this zone in my attention, right? So now I want to draw my support here. So I have a support here, as you can see. So price used to reject this resistance line. Once it broke above that, it had a retest and it acted as a support. Very nice clean price action on that move up. Then once the move down happened here, right, now we are seeing this pullback all the way down here. This is our move down. Now we want to draw our lines. So I go on the, now that I'm on the line chart, I want to draw my support or resistance. So I have this support area. This area is tested now. It used to be a resistance, price broke above, now acted as a support. Now when price comes back near around this area, I expect this to act as a support or a demand zone, right? Now if I go, so I have my line drawn here. Now I want to go back on the candles, so I see everything with all the wicks and everything, right? So this is the significant zone that we're looking for. So step 3, draw the support or resistance line on the 4-hour time frame. This is done. The next step, we go down to the 15-minute or 5-minute time frame to find and wait for a confirmation to enter. And this is the most important part. The best confirmation that I always look for is a liquidity grab. Those are the most high quality trades that I tend to take. What do I mean by that? If I go down on the 15-minute time frame, right? So in this particular example, we came really close to the support. But if I go on the 4-hour, I see that I have a demand zone here formed. Let me just delete this. So I have a demand zone formed down here, right? The demand would be from here all the way to the top of this candle. To the top of this candle, yeah. And look how perfectly it aligns with the price action later on after we came to retest this zone. Now, if I go down to the 15-minute time frame, here we go. So we had a very nice retest of this demand zone that this was the first time. And keep in mind, after we see a trend either to the upside or downside, those demands or supports, or those supplies and resistance lines that you have on your chart, the first time when they are created, wait for a retest of those zones. So the retest of the zones are usually the highest quality trades that you can take. By that I mean, if we come back to this demand zone again, it's going to be a lower probability trade, but this is the first time of the retest, so this is a very high quality trade. Now I wait in the 15-minute time frame. Let me just go back to this. I want to bring this text box here so that we will always have it here. Let's see where. Here we go. All right, so now we have the steps all the way noted here, right? Now we had this big move down. So what I wait for is a hold. I need a liquidity grab first, right? So I want to see a hold of this demand zone and also a liquidity grab. So we came down, made a low of the day, bounced right back up. We didn't break this structure. The break of a structure would be either here, right? Or would be on this area here. These two need to break in order to get that break out of a structure. So that means the character of the move is changing. We have a change of character, right? Now we made that low of day, then we went back up, came back down, and this is your liquidity grab. So this candle here, I'm gonna put a circle around it. This candle here, this is your liquidity grab. So when it came back up, honestly, I wasn't watching the chart, so I would have entered here, but when I went back to my chart and I started watching this action, I saw this price, I saw that price is holding around here. So I took an entry right at it was honestly a perfect entry. I'm not gonna sit here and pretend that my entries are always gonna be perfect, but in this scenario, it happened. We got lucky. Otherwise I would have just entered at this candle right here and I would have held. Now, where do I place my stop loss? My stop loss is going to be below this liquidity grab. So we have a very minimal risk compared to the reward that we're going to get from our trade. And this is, keep in mind, this is an intraday action. It's not a swing trade. If you want to swing trade, you can have a wider stop loss and let the trade run for you for obviously a longer time and have your targets based on the 1 hour or 4 hour time frame. But now, so we came down to this 15-minute, we found our entry spot, we got in, and the next spot, our target is going to be all the way back at the major rejection zone. So I exited on this trade at this red arrow here. The reason was that you see this wick here at the bottom, so this one here, let me just draw a circle again. So this wick here, that's where I wanted to exit. This trade went higher. I could have made much more profit, but I was just happy with my profits. I made around $700, $720 on this trade. I'm going to show you. So this is the proof for the trade that I took on Euro USD. And here's also the chart on MetaTrader. That's where I take my trades. So this is my entry, as you can see, right at the bottom of the move. And we caught the move all the way to the upside here, which is exactly what you saw here on the TradingView chart. And we made $700 profit on this. The strategy I used again was that I waited for liquidity grab below the low of day, so stop losses are taken out, and then I take my entry. I could have taken my entry around here and there was no problem. We would have had our stop loss right below the wick of here. And if you look at this, so entry here, that was our entry. Oops, sorry, I always make mistake choosing this tool. All right, so entry, we had it around here. Now stop loss below the wick, a little bit below the wick of this action, and then our target was around here. And here we go, that was a 10.7 risk to reward ratio. Like, it's awesome, like the best risk to reward ratio we can get. Any trade with a 1 to 10 risk to reward ratio is like, you have to take it. You cannot hesitate on those trades because these are exceptional and once in a while opportunity trades that you can take. And this is how we capitalize. We want to look for higher probability trades. So yeah, this was a trade that I took on Euro USD, made $700 profit using this strategy. I marked the entire steps for this particular strategy that I use, and I use this strategy honestly on a day-to-day basis, and it has worked for me in every different market conditions. Now let's go over some other charts and just apply these steps. So I'm just going to copy and paste this. Let's go over, for example, I don't know, just do something random, Australian US dollar, or whatever chart you whatever pair that you watch. You can also apply all these conditions to stocks or futures or whatever instrument you trade, right? Now for the Australian dollar, so the first step, we go on the 4 hour. I'm gonna put the steps here. So we go on the 4 hour time frame or 1 hour, up to you. Now we look for swing lows or swing highs, right? Let's do something that's happened before. So for example, we have the swing low here around this area, right? So look at this. So if I go on my line chart, I find my major support, which is right here. Like, look at this, 1, 2, 3, 4, and again 5 here. So 5 times that this support was held. So we have 1, 2, 3, 4, and this is where I would be interested to take my trade, right? Now I go back on my candlestick chart. Here we go. So now on the candlestick chart, we also want to find our demand zone if we have any. There we go. So the demand zone would be somewhere around, so we have this here. I want to drag it all the way and so here we go. So that would be our demand zone here, so above the body of these candles here after this big move up. And then it was kind of invalidated. It was kind of a messy action. It's not a high probability demand zone, but this support line is definitely a very strong support. So even if you have the support drawn, that's good enough for you. Now we switch down to, what's the next step? We switch down to the 15-minute time frame. So I'm just going to copy paste this again, go back to the 15-minute time frame, paste it here. Oh, there we go, we have it right here. Awesome. Now if I zoom on this trade, oops, my apologies. All right, so we had this zone, so that's where we would be interested to possibly take any possible trades here, right? All right, so now we have this big move down. Here we go. So where's our liquidity grab? So we came to this what's it called, the demand zone and the support. So this support line gets touched here. One thing to keep in mind, look at this candle on the 15-minute. This looks like a liquidity grab, but did we have any break of structure? The break of structure would be breaking one of these highs. Major break of structure would be above this high, right? Or this high. Like, this was never broken, so this wouldn't have been our break out of structure. So I would draw a line here on the 15-minute. Here we go. Now, when you see this big move down, consolidation into this demand zone and the support area, and you see all these wicks towards the downside, this is more than likely just taking liquidity and taking the liquidity from the stop losses placed down here from all those people who were long. They took the liquidity and then pushed the price back up. Where could I enter possibly? If you want to be aggressive on these kind of trades, you can take your entry when you see a big wick towards the downside, have a wider stop loss. You would have probably gotten stopped out on this trade for the first time. Then you had another chance of re-entry on this trade down at the bottom here as soon as you see this big wick and a candle close above the support again. That's why you have at least 1 to 2 risk to reward ratio. What that means is that, let's say for example, the first time you got stopped out on this trade, the second time when you take this trade, if you make profit and still have that 1 to 2 risk to reward ratio, you're still gonna come out profitable. Even after 3 trades, if you take 1 trade that is profitable, you're still gonna come out break even. That's why risk management matters the most in trading. Now, another entry would have been a break out of the structure at this candle. So as you see, this candle closed, you can either this would have been you're gonna have to have a wider stop loss all the way down at the wick of this candle, but then instead you had a big move up towards the upside. And now if you go back, if you want to have like a day trade on this, if you want to just scalp it, or if you want to day trade it, you can set your target around here, this line, and you could have taken profit right here. What would have been your risk to reward ratio? Let's see. If you had, let's say, an entry at this area, for example. What happened? Oops. So if you had your entry here, your target, your stop loss, this would have been still a 1 to 2 risk to reward ratio, which is still great. You had a 1 to 2 on this trade. Even you were patient on this trade, took your entry when you had the highest confirmation, highest probability confirmation, and then you took your trade. If you were to take your trade, have your stop loss here, have your entry right at the bottom of here when you saw this candle close, then you would have had a 3.83 risk, almost 1 to 4 risk to reward ratio. All right, I hope you guys liked this video. If you guys enjoyed this video, make sure to like, subscribe, and comment down below what you want to see on the future videos. And with that being said, have a great day and see you guys in the next video.